Alright guys, so finally the much anticipated account 3 details is out. It's called Flexible, F-L-E-K-S-I-B-E-L. That's obviously the Malay name. So what are some of the big changes? I'm sure you already know, but for those of you all who are living under a rock, maybe just allow me to briefly go through it. The current format for EPF, right, is that there are 2 accounts. One we call retirement and the other called well-being. So for every 1,000 ringgit that goes into your EPF every month, let's say, 700 goes into your retirement accounts. This would be the bulk of it. And then the remaining 300 goes into your well-being. So what is well-being? Well-being is an account that you can use for things like medical, things like house renovation, stuff like that. Now, because people are suffering, so to speak, and there's money in EPF, many people have been asking, hey, can we take money out of EPF? Though I have to say, probably a big chunk of them just want the money to invest and, speculate. So the government has decided to come up with a new format where now that 1,000 ringgit that goes into the bank account every month, 750 goes into account 1, for account 2 is 150 ringgit, and account 3, which is the new account, you get 100 ringgit. So this account 3 is very easy to take the money out, right? All you have to do is do some administrative work, and that's about it. Now, of course, the interesting thing, so this is relatively straightforward because this is whatever income you earn and how it gets divided. But the interesting thing is how existing funds in account 2 can be transferred into account 3. So there are 2 versions, right? One is two scenarios. One is if you have more than 3,000 ringgit in account 2, and the other being lower than that. So this is meant to help B40 typically. So if you have 3,000 ringgit in account 2, it means that straight away you can transfer about a third, which is 1,000 ringgit into account 3. Now, for whatever reason, which I am not too sure, 3,000 or more for account 2, same thing, 1/3 can go into this flexible account, but then 1/6 needs to go into the retirement account 1. I'm not sure why they're not applying this for people who are B40 because guess what? Retirement is also important to B40 people. Yet, that is what the government has come up with. But do you have overall thoughts on?
No, but then last time in 2007 when they introduced this EPF flexible account, right? It's only for medical expenses, but right now they kind of like open for everything, probably because they see like it's not just about medical expenses. There's like your rent and everything. Let's say you don't have enough money. But then I think it's pretty well thought of.
So it's designed to avoid the 2022 debacle where about 91 billion ringgit was withdrawn. And then the year prior, right, is 131 billion ringgit. I mean, that's crazy. Right? So you got a net outflow of 58 plus 6, right? 54 and a half billion, 64 and a half billion ringgit.
And then things start to like ease out. I mean, obviously because recovery happened already, people's jobs start to become more steadier and everything. So withdrawal also is becoming lesser. You can see like it dropped like almost 50%, and then there's like net inflow coming in. But we shall see in 2024. I think 2024's contribution also will be quite substantial. I think it's because this one you mentioned about this voluntary contribution, right? The limit has increased from 60,000 to 100,000.
Yeah, unfortunately, the pre-Madani government did not think of the EPF as an entire system, right? They only thought of how much money they can take it out for their constituents. But I think a more holistic way to look at it is, sure, outflow can happen. But if you can help with the inflow, then that's good as well. So I'm not sure what is the annual voluntary contribution right now, historically. I would imagine it still has a few billion, I'm going to guess. Could be wrong. But, essentially now people can add up to 67% more into their EPF, right? Going from 60K to 100K. And so you can see that this government is a lot more calculative in a good way. or rather they are making more calculated moves, and they are also allowing people to add in more money. And I think that is a fantastic move. This should see a gradual increase into the EPF.
Yeah. So just want to share, this is basically the funnel approach of the entire EPF members that contributes inside EPF, and then the breakdown of each. So in total, there's 16 million in 2023, and then those that are active are meaning those who actually contributed once on the rolling 12 months. Is about 50% of this entire member, and then about 37.7% of them have less than 10,000 in their savings with EPF. This is as of 2022, and then 27% of them have less than 5,000, and then 18% have less than 3,000. That's like still quite a lot. It's like 1.5 million people don't really have enough savings inside their EPF.
Okay, so to be fair, it's very important to break down that 1.5 million, right? Because if you are a fresh grad, 3,000, so year one, right?
Yeah.
So there needs to be more data on the demographics and like the breakdown. Now, of course, if you are 50 or 55 and that is your situation, then that is challenging.
Yes, exactly. And then we have the final last bracket, which is the T20 or the T10 or T1. Basically, they have about 1 million in savings, and that's about 76,000 of them who is the active member of EPF. Okay, so we can see that some of the withdrawals in excess actually have dropped a lot. So this is basically how much of them actually withdraw up over the years. The blue color bar is basically the amount that they have inside their EPF, and then the orange color is the withdrawal. So you can see that after COVID, everything start to like tone down a little bit to now it's around like 2.7 to last time it was 2.7 to 3.5%. Now it's like less than 2% already. It's like 1.2 to about 2.2% like that. So which is pretty good. Like people is started to become more rational already in terms of withdrawals, and they are saving more in terms in their EPF. And then you can see housing related also drop a lot. But probably because of this EPF Account 3 scheme, right? Maybe you will see withdrawal increase for housing related, especially for those who recently just bought a home. Right now, the property market is booming. My friend is actually an agent, and he managed to close quite a number of sales. So I can tell from that. And I also got what some of the YouTubers who are in Johor. So Johor is exceptionally more booming. So probably you can see more withdrawals because probably they're going to be buying some furnitures or whatsoever during that particular year or month. So this time I expect like maybe there will be a bump up in 2024 onwards. Education-wise, they also don't want to take out money to spend on education. So you can see now it's like less than 1%.
That's already. Actually crazy that 1.6 billion for education.
Yeah, exactly.
Actually, now that you mention it, right? Maybe, this is the leading indicator, right? For education companies in Malaysia. That's why they're such a terrible industry right now.
Could be. And also because there's a lot of online, these digital courses, like us also. So that's disrupting the traditional education. So yeah, probably that is the reason why.
Hello investors. Are you tired of going through endless complex financial reports? Maybe you're sick of all the information overload? Want a faster, easier way to research stock investments? Well, we've got the solution for you. Introducing FIRL Pro. FIRL Pro is your go-to source for concise, easy to understand stock reports. We shortcut your research journey by 90%. Each report is crafted to be straightforward yet informative, taking no more than 15 minutes to read. That's right, just 15 minutes to unlock key insights about stock investments. The program works especially well if you are busy with work, family, and activities. The best part, it's totally risk-free because we offer a hassle-free money-back guarantee. If you're not satisfied after purchasing it, just email us here within 10 days of purchase for a full refund. No questions asked. Not sure about the program yet? No problem. You can check out our free sample reports available in the video description or comments below. It's a great way to experience the FIRL Pro advantage firsthand. Get informed with FIRL Pro.
Okay, so this is EPF expectation. They think that in 2024 alone, about 25 billion or actually 20 to 30 billion is going to be withdrawn from the account. This is their estimate of about 44% of 57 billion. So in total, right, there should be about 57 billion inside EPF account 3 if you calculate the entire Malaysia population. So it's based on their past record or behavior based on withdrawals in 2021, 2022. That's what they come out with. They come out with 44% of the entire EPF 3. And then this figure comes to about 1.2% to 2.9% of the GDP in 2023, which is still quite small. But then I think you got mentioned a little bit about if let's say the withdrawal, how much will it be contributed back to GDP, right? It's about...
Yeah, so they're anticipating 25 billion, right? So we can see 2022's GDP grew by 8.7%, where there was a 90 billion withdrawal.
Yeah, correct.
Now, if very simple math, and this is obviously not going to be very accurate, but the simple math is in 2023, I believe we grow somewhere like 3-4%. So let's call it 3.5%, right? Or 3.7%. That means you could argue that part of the like the 5%, 8.7 minus 3.7%, let's say, can be attributed, roughly speaking, to that 90 billion add-on.
Right.
Right. And so from there, and I think it somewhat makes sense because our GDP is like 400 odd billion US dollars, which comes up to almost 2 trillion ringgit. 90 billion of that is about 4%. Did I get it right? 4.5%?
Yeah, around there.
Right? Yeah, so it's about there. And then if 90 billion produces 5%, what will 25 billion produce? So it's probably going to add 1.5% to GDP, maybe 1 to 1.5% potentially.
Yep.
I do have a question on how they come up with the number because initially my assumption was, look, we have 1.1 trillion in EPF. Since account 2 is 30%, so 300 billion. Now, I think if that is true, we would expect 100 billion, right, to be added into account 3.
100 billion.
Because it's one third, right?
Yeah.
So you can see here.
Not account 2.
Well, account 2, sorry. If we go by the logic of 70% in account 1 and
30%.
So you got 1.1 trillion. So 300 billion. So
will be
account 2.
Yeah.
So here they are saying that you are allowed to it's optional. You can take the option to take out one third and put into account 3 for both scenarios of 3,000. Correct? So in this case, well, the math should be 100 billion, right? If 300 billion is in account 2.
Yeah.
Right?
Yeah.
Now, of course, not all will take, right? Like, I'm not planning to do it. I don't know whether you're planning to do it. But, that's not there.
Yeah.
So, in theory, in my head, it was 100 billion. But then I also have to remember that account 2 only started existing in 2007. So, it's definitely, I could be wrong, but I think it's lower than 300 billion ringgit in account 2.
Or probably we can reverse calculate how they even get the 50.
So, if we were to reverse calculate, so this 57 billion is what they anticipate will be in account 3. Right? So if that's what they anticipate, we reverse engineer. In other words, what EPF could be applying, if you just times 3, you're looking at about 170 billion ringgit in account 2. Yeah, so 25 billion ringgit is what is expected. And then once things stabilize a bit more, then in account in 2025, it should be a lot less. I want to touch on this. So this is more like the initial because you can transfer money and things like that. But then what happens after that, right? Assume the B40s spend all their 1,000 ringgit and whatever. How can they benefit from this? And I would say the math is not that favorable. It's still good, but it's not very. I think it's better to save it, right?
Yeah. Because
if you're earning 2,000 ringgit, let's say, which is a typical B40, if you add in, assuming you got employment and assuming your employers pay EPF, so that's 24% of your income goes into EPF. Let's round it up to 25. Okay, so that means a quarter of that 2,000 goes into EPF. So that's 500. ringgit. But remember, only 10% goes into account 3. So that's 50 ringgit. So you stretch it out over 12 months, that's 600 ringgit. Now, what can you do with 600 ringgit? Now, it can be helpful, but that's like, I think, 2 or 3 milk powder. If you're living in a single room, that's maybe 2 months potentially.
Yeah.
If you burst your tire and all that, maybe 1 or 2 tires.
And also, if let's say you withdraw, you also foregoing the compound interest of the 5%.
Yeah,
to
that's
6%.
That's the long-term trajectory, right?
Yeah.
And then the thing is, I also did the math, right? If this is true, that means instead of 50 ringgit being allocated for someone with 8,000 ringgit, which is obviously a lot better off, it will be 200 ringgit. And then instead of 600 ringgit, at the end of the year, he will have 6,000. But the question is, will a lot of people earning 8,000 ringgit require a 6,000 ringgit sudden cash injection? In some cases, maybe yes. But I think if it builds up over 5 to 10 years, then it becomes a bit more significant. So they have that option.
Yeah, exactly. That's an interesting thought. But this is a few takeaways. So T20 is less likely to withdraw. I think that is almost very true already.
I would say like the two type T20, one that will stay, and the other that think that they can invest. So they maybe take out 200,000-300,000 and go and invest.
Yeah, exactly. And then B40 and M40 will be taking out. I mean, there's obviously there are more tendency to actually spend whatever that is given to them.
Because life is hard, right?
Yep. So and then
most importantly, what sectors, right, are going to benefit, right? I mean, we don't really care about the social aspect. No, just kidding. But let's talk about the
few companies. So there's number one is obviously the consumer. With the EPF 3, you have more income to actually spend on the necessity. So we can like spot some of these like Spritzer, CCK, which is your egg and your chicken, Pardini, which is your clothes that you need. Some of the things that I didn't add, which is your airfares, your AirAsia and everything. You can also include that, but how many will actually travel, right?
Yeah.
And maybe actually they will.
One area that's going to boom, I think, is spare motorbike parts.
Yes, correct.
Because unfortunately, there will be a portion on the B40 who will not use it for their life expenses. They'll use it for their lifestyle expenses.
Yeah, which is inside the vehicle.
There you go.
Yeah, but first is the other one is furniture.
Yeah,
furniture is because of property. So Po Huat and Lee Swee Kiat, which is a mattress company you can look at. Then the last one that you mentioned, Burma's Auto and Hong Leong Industry. So Hong Leong Industry distributes Yamaha motors and also the spare parts also. Burma's Auto is more towards the car segment.
Mazda.
Mazda and all. So
but with B40, you're probably not buying Mazda.
Yeah,
or you shouldn't be, I would say.
Yeah, you'll be contributing to Hong Leong Industries' revenue. So that's about it. So,
guys, I want to announce. Did we announce the last week? I cannot remember. But I just want to announce there's something new for FIRL Pro, which is the boring portfolio, right? Now, this boring portfolio is basically for people who want a more boring kind of investing, mainly dividend focus, and there are industries that are generally growing, nothing big changes are happening. But if you want, they call it an income portfolio, we have now finally launched. And why did we launch? Because for the other two portfolios, FIRL Pro and Catalyst, although they have generated pretty decent returns, especially FIRL Pro, it's, some people find it, too volatile, right? You can see some of the stocks that is in the portfolio is down like 40%, but some is like double, right? Am I right?
Yeah.
More than double.
There's 3 companies that is more than double.
Yeah, there you go. So, including dividends. So, we thought of bringing in the boring portfolio, right? And I think right now the average dividend yield is 9%. So it's like, 50% higher or more than 50% higher than what you get an EPF, excluding any potential share price gain, right? So will it be 9% forever? We don't know, but we are building a portfolio in part to also outpace EPF. And right now, I believe we have 8 stocks, 8 companies, and there won't be a lot of churn in the company. So anyways, this is FIRL Pro, right? We write reports on companies that potentially could benefit you if you take action. Of course, we don't get everything right. As you can see, we have a few rates every now and then.
Yep.
But if you want some sort of shortcut, right, for you to find investments that might fit your profile, then FIRL Pro is suited for you, right? Whether you are somebody who is a little bit more excited about short term, we have the Catalyst. If you are someone who want to find what you think what we think are the best ideas in the Malaysian market and foreign market as well, because we two or three stocks are actually in the green that are foreign. This would be US, China, Singapore. Then go for FIRL Pro, and if you want something slower, go for the boring portfolio. But if you want to get a sense, right, of what is inside the program, head over to the free sample link, right? Get a taste, no problem. And of course, if you decide to hop on and buy the program, we have a money back guaranteed within 10 days. If you don't like it, just send us an email. We will give you the refund within 30 to 45 days. And there is a 10% discount. The coupon code is 10% off. Which you can see the full word in the full code in the comments or descriptions. Yeah. So guys, thank you for staying all the way until the end. Always appreciative for your support. If you have questions about FIRL Pro, send us an email or send us an Instagram DM, or if for whatever reason you have our numbers, send us there as well. And you can of course ask in the YouTube comments. Bye-bye.